This is a day where you're going to be a little cautious picking the bottom, but what I will say is that we have been in an environment for many years now where valuations have been inflated due to QE. We are in the process of correcting out of that. And what I would say is that for the first time in many years, you are seeing some value being restored to parts of the market, European equities, equities here in the U.S., and even in emerging markets. So I think for investors with a longer-term horizon, not trying to pick the exact bottom, you are getting a bite at the apple, something you've not had in many, many years.
We heard from Doug Ramsey over at Luthold this morning, and he said he thinks the selling is going to get worse. He could see a 20% decline in the S&P 500. Do you think it's possible for us to continue this trend down?
Well, I think it's certainly possible. And again, the volatility in the short term, this is being driven by sentiment. And there are many markets, including emerging markets in Europe, that are already in bear market territory. But I would say this, again, let's be clear. There's not a single catalyst for this. This is about concerns over China, concerns over global growth, concerns about the Fed. The latter, the probability of a September hike is already receding. And at a very high level, I would say that unless you believe the Chinese economy is so bad that it's going to pull the global economy into another recession, then I don't think it's likely we're going to see a 20% correction on the S&P 500.
Russ, looking at two specific industry groups, energy as well as financials, they are leading the S&P 500 lower today. Are those areas in which you're prospecting?
Well, I think in the financials, absolutely. There are some good opportunities there. This sector was reasonably priced even before the sell-off. I'd be a bit more concerned about energy simply because the drop in energy stocks has followed the drop in oil. And while you are going to see at some point in the next 3 or 6 months enough value restored to that sector, given the glut we're seeing right now in supply, it's not clear that crude is going to make an imminent bottom.
Why doesn't, by the way, we've only heard crude and other falling commodity prices as sort of doom and gloom for the global economy. And I understand if you're long the stocks, you think that, or if you work in the industry, clearly, or if you're a country like Russia, whose economy really depends on, or Venezuela. But for the rest of the world, isn't it a good thing for global growth to have cheaper commodities like that?
It is, and this is an excellent point, that some of what we're seeing right now, whether it's the fall in inflation expectations, the fall in nominal rates, or the fall in crude, will actually help restore some equilibrium. You think about the U.S. economy. Lower crude, lower rates, these are positive for the household sector. They're positive for housing. It also illustrates another point. Again, things may get worse. But if you look at most measures, most leading indicators, this is not 2007, this is not 2008. Leading indicators in the United States are up about 4% year over year. By this point, on the cusp of the bear market in 2008, they'd already been negative for more than a year. So again, in the United States and even in Europe, most economic signals are telling you things are decent, and to the extent that oil prices are lower and rates are lower, that should help further stabilize the economies.